we're skeptics. I mean, in theory, we're skeptics. And we are learners. And I want to learn all I can about what's happening with Reddit and GameStop and shorting and hedge funds. I'm overwhelmed. Let's talk to a financial guy, friend and fellow activist, Phil Ferguson. Hey, brother. Good to talk to you.
How are you, sir?
So I'm browsing. Natalie's actually browsing the Reddit threads, and there are a squillion posts. And this is a whole new flavor of financial whatever. As I'm looking at the comments, and I'm not seeing these deep analyses of whether to buy or sell and what's happening with shorting the stocks, blah, blah, blah. I saw a post that said, if you sell now, your mama's a hoe. I thought, what? If you sell now, you're a little bitch. I mean, I'm seeing all this type of stuff on Reddit. And I'm like, we're in strange territory. And I need you to help us understand what's going on with Reddit, with GameStop, with the markets. So let's start at the beginning. What does it mean to short a stock? Phil Ferguson.
Excellent, excellent. And if I may, I have a couple of disclosures that I think I'm supposed to mention. Of course, I'm Phil Ferguson. My business is Polaris Financial Planning, and it is a registered investment advisor in Illinois, Texas, and California. I am not going to be giving any personalized financial advice to anyone listening today. Please check with your own professional advisor before taking any action. My intentions are to provide information and maybe, even with a disclaimer, a little comedy. So hopefully we are entertained. Are you not entertained? A short, I'll contrast it by a long. Most people understand that if you buy a stock for $10, you're hoping at some point in the future to sell it for an amount higher than $10, let's say 40. Easy enough. A short is the reverse of that. And it often involves you borrowing shares from somebody that has them already, a broker. And let's say they have 100 shares. You borrow them at $30. You sell them on the market at $30. So you're basically taking a loan in the form of stock. And your hope is that at some time in the future, a predefined period of time, you can sell them for a price less than $30 and then pay back with the shares that you bought at less than $30 and keep the difference. And people will often ask, why would someone let you do that with their shares? Because you're paying them rent or interest on the shares that you're borrowing.
Yeah, I mean, that's my first question. Not to interrupt, Phil, but somebody loans me shares and then I go sell something that doesn't actually belong to me. And I think that's my hang up. How does that even happen?
Yeah. And it's an important thing. So when I borrow those 100 shares at $30 a piece, I am committing to that person that I'm borrowing them from that they're going to get not only all of their money back, all of their shares back, the 100 shares, but I'm going to pay them rent along the way for the purpose of borrowing those funds. So that's what the person holding the stock originally gets out of the deal. They don't have to sell them. They don't have to buy them. Someone else is doing that and they get paid rent. If the shares drop in price, I've sold them for 30. I get to buy them back at 20, and then I return the shares to them and I get my money back.
So it's kind of like if you take out a loan, but you pay it back with interest kind of thing.
Yeah. And it can work out pretty well. And it's whole nother subject, whether this should be legal, because people will ask that. There's arguments for yes and no. Maybe some better controls might help. Shorts do provide a valuable service to the market, at least theoretically, because it is an indication that maybe other people have gotten carried away and are now spending too much for that stock. But that could be argued, maybe even successfully, that we shouldn't have shorting of stocks at all. But that's how a short works. The one problem with a short is that you have a cap on how much money you can make, but your losses are unbounded. So when you normally buy a stock long, if you pay $30 for a share, if it goes to zero, That's the maximum you can lose, 100%. 30 times whatever, how many you bought. When you short a stock, the maximum you could make is when the stock goes to zero. So you could make that entire $30 as profit. But if the stock goes up and you have to buy stock to replace what you've borrowed at $60, you could lose 100% of your money because you have to pay more for the stock. And the unbounded loss comes in when the stock jumps to 60 or 90 or 100 or 300. Now all of a sudden you're paying 10 times to replace what you already borrowed, and that can be very, very expensive. So you can lose a lot of money. And the interesting thing is there's a lot of complicated strategies that companies and very sophisticated investors can use to protect themselves. So a hedge fund might hedge their bet on a stock going short by buying what's called a call option, where they are permitted to buy the stock from somebody else at $60 in the future if they choose to execute that option. And it might cost them 50 cents or $1 because $60 is such a crazy price for a $30 stock. But if the stock suddenly goes up, they execute the call options, they buy the stocks for $60 a piece, and they return them to the person they borrowed the stocks from in the first place. They might have lost 100%, but they will not allow themselves to have unbounded losses because they know better.
You understand, though, how all of this makes my brain melt. I'm like, I'm sorry, you can jump through this hoop and you do this on a day with an R in it. You stand on one leg and blah, blah, blah. And a lot of it's counterintuitive anyway, because you're betting to make money on the failure or at least the diminished value of a company. Right?
I want to jump in because that is an incredibly important distinction. And what drives a lot of people to want to stick it to the man is that these hedge funds were trying to make GameStop go broke. It is never the intent. Well, maybe it usually is not the intention of the person in a short position for the company to fail. They would be okay with that. They're indifferent to it, but that's not the intent. That's not their goal. Their desire is for the stock to decrease in value for them to make money. And that connection to the company itself may be non-existent, because if a company is making money, whether its stock trades for $30 or $300, generally does not affect the company at all, because the company is running on the cash that they created from the initial public offering of that stock 20 years ago or last year. And so if the price of the stock changes, it doesn't materially affect the company. It might affect the board of directors. It might in fact affect anyone that has stock options for good job performance. But generally speaking, if the stock price goes up or down, the company keeps doing what it's doing, whether it's successful or unsuccessful, regardless of what the price is.
Okay. Well, before I get to Reddit and whether or not your mom is a hoe, before I get to that, what happens if I short a stock and the company goes bankrupt outright? Am I totally hosed?
Then you would, no. If you've shorted it, you have the optimal result if they go bankrupt, because the stock becomes worth zero and you can buy or not have to buy the stock to replace it because it's not worth anything. And so if you borrowed $3,000 worth of stock, you now just get to keep the $3,000.
Okay.
Minus the fees.
So while the companies, these hedge funds may not be rooting for the bankruptcy or trying to even manipulate the failure of a company, they do stand to cash in, right?
Yeah, they would profit if the price goes down. If the company fails completely, that might be a bigger success. Theoretically, they don't engage in any activity that would be considered price manipulation. However, often hedge funds put out white papers or very public announcements that they're shorting this stock and that they think the company has problems for X, Y, and Z reasons. And I think that probably either is or should be illegal, because if you have a vested interest in that stock and then go bash that stock, you are now trying to manipulate the price of that stock for personal gain. And whether you're trying to do that to get the price to go up or down should be illegal. Interesting point. While there are hedge funds that are short on this stock, or at least were and may still be, there's also lots and lots and lots of personal investors that short stocks on a regular basis. And if one of those was GameStop and they did not use sophisticated strategies to protect themselves for the unlimited losses, this little game that we're playing to screw the hedge funds might cost the hedge funds to lose millions and even billions of dollars, but there could be tens of thousands of little guys that just got fucked hard because they didn't know about putting a call to protect themselves from the upside potential. And they got a margin call from their broker saying, you borrowed $3,000 worth of stock. It's now worth $30,000. Our requirement is that you put half the cash down. So you either have to show up with $27,000 or we liquidate your position and take our stock back. How's that for fun? And if you have other investments in your account, we can forcibly liquidate those to get our money back.
Now, wait a minute. Because, all right, well, let's just talk about Reddit. And I've taken a bit of a detour around the barn.
Yeah.
But on Reddit, there is this call to take this failing company, GameStop, right? And I mean, who wants to go into an in-person gaming store when you can download them via stream or Epic Games, or you can buy online or do whatever you're going to do? And so they've taken, I think it was $1.4 a share or less. And let's drive the price up to screw the hedge funders. Let's just show these bigwig, fat cat stock market bullies that we're going to bully them right back and maybe make a little money in the process. I mean, is that your perception of what the thinking was?
Yeah, I think that's a big part of it. Of course, it's complicated, and I even try to catch myself from overgeneralizing because people have different motivations. The interesting thing that part of the reason that the stock had gone from $3 or $4 6 months ago to $18, $20, $30 now is that a person bought 13, 15% of the company and gained 3 positions on the board, and I've forgotten his name right now, but he also runs or did run a company called Chewy, which you may use. You might even get ads for it. They sell pet food and treats and stuff online and deliver it to your door. And his idea was that if he could get control over GameStop, maybe they could do the same thing. You don't have to go to the store to buy the original Zelda for your Nintendo system. You could order it from them and they'd ship it to you, and moving their business much more online like Chewy is. And they could have an increased value in all of this inventory that they have in these stores all across the country. And that would make the stock much more valuable. And so it was up in the teens or around 20 before this started to get weird, because some hedge funds thought, nah, they're not going to succeed. They got old games, shitty games, too many liabilities, too much debt, all these buildings they got to get out of leases and rents and employees and all these problems. Their value is going to keep going down, so I'm going to short it. The interesting thing is there's also a lot of hedge funds that are not shorting GameStop. They're buying shares. That's part of why the price had gone from $4 to $20. So while some hedge funds may be getting screwed by the Redditors, other hedge funds are making more money than they ever dreamed possible on GameStop stock. So some winners, some losers. It's kind of arbitrary. I explained it to someone like this, that you're chasing an evil person who runs into a giant apartment building and you set the building on fire, regardless to how many people and families live inside of that building. And you didn't even think to check the back door to see if that evil person had an escape plan. So they run through the building. You see the building as the enemy and you burn it down. I don't give a shit who gets burned or who wins or who loses. And you're now buying on this emotion of screw the man, which means you're buying stock on an emotion, not for a logical, statistic, mathematical reason. That's almost always bad.
Now, I understand the sentiment, right?
Yeah.
I mean,
I can relate.
they get to play by a different set of rules. They get to sort of be the insiders. They get to influence the markets because they have, a way to message the marketplace in ways that skirt the SEC. I'm tired of being the little guy. I'd like to
Yeah.
stick it to the big guy. I understand the sentiments. I mean, when you look at it from that point of view, it's an easy position or an attitude to relate to. Would you agree?
Oh, absolutely. And I relate to it quite well. Matter of fact, on episode 348 of the Phil Ferguson show, I had on Rosemary Batt, who was one of the co-authors of a book called Private Equity at Work, when Wall Street managers Main Street, when Wall Street manages Main Street. Yeah, I read that. Okay. And we talked about private equity, AKA hedge funds, and how they manipulate the system, how they game the system. The big question, of course, is are they doing anything illegal? They probably aren't in most cases. Are they doing anything unethical? They probably are in most cases. But it's not a violation of the law. So the law would
This
be
is shit
changed.
that they can do because they're
Yeah.
powerful. And if we try
Yes.
it, they're all over
Right.
us. Would you agree?
It absolutely true. And of course, for the entire existence of the United States and almost any country, almost any group, there's always someone that gets more power and more control and more wealth, and they can cheat and bend the rules and take advantage of the average person. And we should have a better system to prevent that. And maybe there's some merit to this game that they're playing, and it gets attention. When you have AOC and Ted Cruz on the same side of an argument, I don't know what the fuck that means. The apocalypse.
Yeah.
I,
Did Nostradamus predict that somewhere? I mean,
yeah.
that's bizarre.
And so I'd like more limits, more controls. Quite honestly, I've been on record in the past, and this is one of those weird things that people think, that when I warn people that there is a possibility that if you get involved with this process, you could end up losing a lot of money. I'm not saying that hedge funds are good. Matter of fact, I have a long record, including the show I just mentioned, of saying that hedge funds are bad and they're a problem. I don't think hedge funds should exist because their net effect on employment and our economy is negative, and they drain the system for their own profit.
I want to talk about these, I'll call them kids. Yeah,
Yeah.
they're on Reddit and they get on board and I don't know, somehow they end up in the market at $4 a share. Holy shit, GameStop is at 400 a share.
Yeah.
Is it true that they get to just go and sort of cash in those chips, laugh all the
could.
way to the bank?
Yeah, they can. And an interesting thing, I just had this conversation with somebody earlier today. There's a lot of surprise winners because a lot of companies held stock in GameStop. Matter of fact, for full disclosure purposes, I don't directly own any shares of GameStop, but I use index funds for my own portfolio. And one or more of those index funds may own GameStop. So I might get a little extra money because people are throwing money at one of the 5,000 or 6,000 stocks that I own. But companies like Fidelity, Vanguard, BlackRock, Morgan Stanley, Edward Jones, technically they own these shares, but they don't own them for themselves. They own them for the individual investors who've put money in their mutual funds. So a lot of investors can make money that way. There's also a lot of ownership of GameStop from other hedge funds. So some hedge funds were betting the price would go down. Some are betting that it would go up. So the ones that were betting that it was going to go down just lost a lot. But the ones that were betting it would go up have made a crazy ton of money. And then maybe they can sell into this as the price goes up or as the price maintains at 300. And there's absolutely nothing to prevent a hedge fund from now shorting the stock at $300 and then making money when it goes to 200 or 100 or back down to the $20 or $30 ballpark. In reality, what could happen is on net, hedge funds could end up making more money than ever before because a bunch of dumb fucks went around and tried to play with the stock market. The other thing is that you don't know who's really driving this because people on Reddit can be easily anonymous. What if a collective of a dozen people owned shares of GameStop and they're doing what's classically called a pump and dump? They want to come up with some reason to convince you to go buy the shares so that their $30 ownership goes up to $50 or $60. And it just became something where someone added the idea, maybe, of let's screw the man, let's screw the hedge funds, and then it gets a life of its own. It's kind of like when Trump ran for president. He didn't really mean to win. He just wanted to promote his brand and make some money. What if a bunch of people just wanted to promote GameStop and this idea and push up the price, and they had $200,000 of stock and they wanted to sell it for $400,000, and it got out of control? You don't know. As an investor, you have no idea who's winning and losing from this game.
That's an interesting perspective. You know, if you're on Reddit, you've got a pseudonym, I don't know, sock puppet account or whatever you call them. You could
Right.
pretend to be a 15-year-old in his mom's basement when the
Right.
truth is you're saying that we have no guarantee that it's not a coordinated effort by a focused group of people who might be already wealthy, perhaps investing in a great many properties, and they say, hey, what if? What if we make it appear as a grassroots? I'm not a big conspiracy theory guy, but I mean,
Yeah.
it's certainly possible, right? They
Well,
get together and say, hey, this would be an awesome way to sort of set fire to the stock, and then everybody laughs all the way to the bank.
There is a lot of known cases and evidence of people buying a stock. Usually they're penny stocks, something for 50 or 70 cents. And then they go online and they go on conversation boards and they tell everybody, hey, these guys have a patent. They're going to cure cancer. They're going to cure lung disease. They're going to cure heart attacks. They're going to be the first ones approved with the coronavirus, the small little pharmaceutical company, and the stock could go up 20 times. I'm just letting all my friends know. And they're letting their friends know because they bought 8% of the stock for $20,000. And if it goes up from 20 cents to 60 cents, they get out and their 20,000 turned into 60,000. Happens all the time. And regulators have a very hard time because it used to be you just told some friends at work or at your church or your little community group. But now you can have this enhanced voice so that if someone thinks you know something they don't know, this is the failure of missing out, FOMO, failure of missing out. I think that's what it is. So it's like, hey, somebody found out that this thing is going to explode in price, and if we all get together and run up the price, I can make a fortune, and that works as long as you're one of the people early in on this pyramid scheme. But if you're buying GameStop stock now at $300 and it goes back to 30, you could lose 90% of your investment. But one of the reasons they do this is that the people that own it short have to go onto the marketplace to buy shares to cover their position. And that also adds demand and also cranks up the price. It's called a short squeeze.
So let's talk about Melvin Capital. Are they totally getting hosed? I mean, you know, did they really stick it to the man? You know?
Yeah, I don't know what percentage of shorts were Melvin Capital. I don't know if that's publicly available. If somebody knows, they can, of course, let me know.
But the headline I'm sharing says Melvin Capital lost more than 50% in January, report says. That's from CNBC. So obviously they got kicked in the teeth, right?
Well, they as a hedge fund or they as the investor in GameStop?
Fuck if I know. I just read the article. Look, I'm a layperson, right? I don't know.
It's one of those. So the funny thing, when the stock was around $20 just a couple of months ago, the entire net value of GameStop, so if you take all of the available stock tradable times that's price, the company was only worth $1 billion, which to you and me, that seems like an infinite amount of money. What would I do with that? But it's a small company, $1 billion. And so when the stock price doubles, it's now $2 billion, and now it's like 15 or 18 or $20 billion company. So often people will say, if there was $1 billion in short and now there's a $20 billion company, they've lost $19 billion. And so that becomes the headline of the story. But like I said, it may not be true because they have ways to get out, or they got out as it was getting nuts. Because if you're a hedge fund trying to pay attention to this stock, when you see this mob over here forming to come burn down your house, someone might go, let's just get the fuck out. We already lost a bunch of money. We'll make money somewhere else. Melvin, I think, has a problem because their specialty is shorting stocks. And there's this growing mood among investors, at least some investors, that shorting stocks makes the companies go broke. Again, we covered that early on. And so I want to save these companies. So people have gone in and bought up stock for companies that a hedge fund, Melvin, thought was going to go down. I think that's the only way they lost $3 billion or needed a $3 billion loan. It's because they lost on multiple bets.
This
But
is
yeah,
like this so
they lost a lot.
overwhelming. Let's talk again about these Redditors. At some point, do they end up stuck with $400+ shares that nobody out in the market wants to buy? Right? What happens to the 15, 20-year-old, whatever, some dude in his mom's basement, and let's say he throws a few grand in and buys whatever he can, thinking he's going to become a millionaire, and then at 400 whatever a share, nobody's there to buy.
Yeah, of course, that would be reflected in a decrease in the price. At one point, it was, I think, in the high 400s, and then it went down to 127, and then it went back up to 200. But yeah, if you buy into the game thinking that it's going to go to 1,000, it doesn't matter if you pay 200, 300, or 400, right? It's irrelevant. This is a investment principle called the greater fool theory, where the price you pay for something is irrelevant as long as someone pays you more for it later. So, but if someone buys that stock for 400 and the game comes to an end and no one else wants to screw anybody, or all of the hedge funds are out and covered or whatever, does the demand to own this stock go down? Do the people who bought at 30 and look at the price at 300 or 400 say, I made 10 times my money? I'm going to say on Reddit that I'm in for 1,000, but I'm walking away. That's why they're all having these memes about hold the line and your mom's a hoe if you sell, because they have to keep reinforcing each other. Don't bail out on me because I've taken a risk with my team and we're all on the same team. But there's going to be people. There's going to be people who go, man, I put 5,000 down and it's 50,000. I'm walking. Sure, it was a high and mighty purpose, but I just made $50,000. I'm out. And so the morality disappears because they made a killing. So does that make them any better? I don't know. But yeah, there's going to be a lot of people who put down. I saw a story about a guy who had $10,000 saved up to buy an updated car, a new used car. And he decided, whatever, I don't want to miss out. So he took $10,000 and he bought shares. I don't know what price he paid. But to your point, if that price is never seen again, he just watches it fall further and further and further, and his $10,000 could become $500 in a few months, and he's just stuck. And
so instead, the point is, instead of sticking it to the man, he just hosed himself, and that's what I'm wondering. Yeah. Does the end game ultimately end up with all of these sort of grassroots types? These sort of, I mean, I don't mean Robin Hood the company, but I mean the Robin Hood types, the counterculture types who are
there will be plenty of people that are going to make money and they're going to fucking let you know about it. But there's going to be a lot of people who lose money and they may not make the effort to tell you how stupid they are. So you get this bias in the information that everyone that played this game made a killing, because a lot of the people that lost their ass just disappear and crawl back into the dark corner and say, well, the stock market is for suckers like me and they just take my money. I'm never going to invest again, which is a real heartbreak. They got hurt really, really bad because they got caught up in the emotion of it. That's what a bubble is. You're buying something at $400, $300 that just a few weeks ago, the entire world thought was give or take $20 or $30 in value. What did GameStop do to increase its market value by 10 times? Nothing. They didn't. They haven't made those changes yet. So yeah, there are going to be people that lose, and there's going to be a lot of people that lose, and it's going to be crying and gnashing of teeth when they figure it out.
It's an interesting thing to watch how, I mean, the market, correct me if I'm wrong, is to a degree about assigning value, right? If a company becomes more relevant and grows, blah, blah, blah. But so much of the market is really about perception. Isn't this tapping into something, right? I mean, we're talking about assigning value based on what we think or what public perception is, even though that entity hasn't really moved one way or the other. Perhaps I'm just restating what you just said. Yeah.
Yeah. There's a theory called, oh my God, now it's blank for me, but that when you take everybody collectively together, they come up with the right answer, and the current price of any given stock at any given moment is the exact right price. But we know that's not true. we know that you can have things like the dot-com bubble, where companies were selling 100 or 500 times the amount of money that they've made. You would never live long enough for that company to make enough money to give to you as a dividend to cover the price that you paid for that stock. And then there's times where the market goes the other way. So there's definitely these emotional components to it. But if someone invests with a fundamentalist approach, you try to figure out, what is that company worth? What do they own? Buildings, factories, trucks, property, patents. What are all the things that this is worth? And you wouldn't want to pay any more than that. So even if they go broke, you could get all your money back because there's actual assets. But other companies are a dream. And so you're hoping that they change the world. This is Tesla. They're going to change the entire world and how we drive cars. And that makes the stock price high because people are willing to pay a lot of money for Tesla stock with the hopes that one day they're going to take over the entire industry.
This sort of, Viva la Revolution sort of vibe that I'm getting.
Right.
The revolutions often don't end well. I mean, sometimes they do, but I'm trying to see the end game. I'm not asking you to commit. But I mean, are they going to drive GameStop to 5, 6, 8, 1,000? Do you see that we're going to see more inflation before things explode?
Here's a funny thing. I don't know. You're right. I don't know. I don't know if it already peaked and it's just going to take 2 months to wind back down to $30. Are they going to rally and get a bunch more suckers to run up the price to 1,000? Either one could happen. And the funny thing is, as an investor, as a sophisticated investor, you can buy combinations of shorting, puts, calls, where you can set up a situation that it doesn't matter to you which way the stock moves, but the more extreme the change, the more money you make. The only time you would lose is if the stock stays in a narrow range. So there will be hedge funds that buy calls and sell puts or whatever combination they need to, that they won't care if the stock goes to 1,000 or to 30, they're going to make money. It's the small guy who sticks his toe in with $2,000 and just buys shares that implode at some point that's going to get screwed. It's going to be the little guy.
They don't speak the language. I don't speak the language. Yeah. I mean,
hedge funds on net are going to make more money on this because it becomes a complicated game that they know how to play.
If you are talking about a grassroots effort on Reddit filled with people who are, I mean, in so many cases, financially illiterate, or certainly not playing at the big league level.
Yeah.
They are easy meat for those people who know the ins and outs, the language, how to manipulate the system. You just described a scenario where somebody's got, all right, I can make money if it goes up. I make money if it goes down. I make money if we go bankrupt. I make money if an asteroid hits the earth. I mean,
yeah,
that's stunning to me. So it's a win-win no matter how it shakes out for the people who know how to work the system.
There is definitely that possibility. Of course, it's in flux, and this goes contrary to my style of investing because I like to think of myself as the tortoise in the tortoise and hare fable. Slow and steady wins the race. I don't want to try to triple or 10 times my money because when you try something like that, there's a chance that you get wiped out. Some investors have been doing what they've been doing is they've been buying an option, a call option. So for a fraction of the money, you can just buy the right, you can buy the privilege, if you so choose, to buy the stock at a crazy high price at a future point. So you might put $10,000 down, but you would be able to buy $100,000 of stock if the price goes over $500. Now, a lot of people are doing that to cause what's called, you're going to love this, a gamma squeeze, which is even more powerful and bigger than a short squeeze because often no one wants to sell you that specific type of call option. So a market maker, which is a brokerage firm that's been assigned to monitor this specific stock, will create a call option and sell it to you, and they collect a fee from you. Let's say in this case, $10,000. And as those get more dangerous, the fees they're going to charge get higher and higher. But after a certain period of time, that's the other thing, is all of this is time sensitive. The shorts run out at some point. All of the contracts have a date, an end date that you have to execute it by or you lose. But you can buy this opportunity to buy the stock at a higher price. So when the stock gets to $700, you could then execute your call option and buy $100,000 of stock at $500 a share and turn around and sell it for $700 a share if you have $500,000 or $100,000, because you have to have the money. So a lot of people are playing and forcing the brokerage firms to cover in case you actually have enough money to buy the stock at a high price, also cranking up the demand and wrecking the supply and demand curve. And the next problem we can have is that when the bubble bursts, all the people that bought call options just walk away and their investment, their gamble just disappears. And these companies who are trying to make the market function smoothly are stuck owning $400 shares because they were concerned that you might actually have the chance to buy $500 shares. So they had to cover their ass in advance. They lose tens of thousands, millions, or even billions of dollars. There might be some companies that go broke over this that make the system weaker for everybody.
I need a Xanax after all this. You know what I'm saying?
Well,
by the way, gamma squeeze sounds like something you would take penicillin for. That's just how my mind works.
It's normally recommended.
Okay.
Erythromycin. Yeah.
I'm being taken to task in the chat window for underestimating the Reddit investor. Let me qualify that then, because I don't know. I don't know the background of whoever's behind whatever Reddit's name is going up. But the don't sell, and if you do, your mom is a hoe crowd. You know what I'm saying? Like if you sell, you're a little bitch crowd, because I'm seeing a lot of that. Hey, let's just go stick it to the man crowd. I don't sense a lot of acumen behind those particular posts. So I'll be more fair and say I'm speaking to those people, obviously working to try to turn the tables on the system, and to try to stick it to the man, whoever the man is, and maybe make a few bucks along the way. At the end of the day, you think we'll be talking about this in 6 months? Does this change the marketplace forever? I mean, now you got people who are probably having little star chamber meetings about how to manipulate all kinds of quote unquote almost worthless stock. What do you think?
I think what might be the most likely incentive or fire starter that gets Congress to do something is going to be after this is all said and done, and there's tens of thousands of hapless American citizens that somehow lost 80, 90% of their money, and they don't understand how it went wrong because they had a plan. They picked up their pitchforks and they went with the mob to go kill the beast. And yet the beast is bigger and stronger than ever before, and they're all broke. And they're going to want answers, and they're going to push representatives and senators to try to figure out that might be something that's a net benefit for everybody. But I don't want to play in the game that eventually gets us to that location. I think you could just write letters to your congressman now and without putting your $10,000 that you have at risk.
Yeah, but I mean, one of the arguments is that if the hedge funds and the fat cat, big wig, big money players, they manipulate the system all the time with no consequence. Why would they want to change the rules to adjust the system now? It's only when the little guy starts to use the system to play by the same rules as the big hedge fund managers. That's going to be the argument. Your response would be what?
They're right. And matter of fact, if they go listen to show 348 of the Phil Ferguson show, we talk about this. Some of these hedge fund companies charge you 2% per year for your money and then 20% of the gains. So they're making a fortune with small people's money. And they've convinced small people that to invest in a hedge fund is a good idea, so send us your money. And then they break and cheat the rules. And the funny thing is they don't actually beat the market. You're better off investing in index funds most of the time. So they don't outperform for people that give them money, but they do outperform for themselves because they get a lot of fees out of it all.
All right. I'm learning. By the way, I just noticed that on your full screen image, I left the hashtags up from a previous conversation regarding Zara K. Zara K is being held in Tanzania. Right now, they've taken her passport. And I was looking up going, why is Zara K's hashtag up whenever I'm talking to Phil Ferguson? You know what? Fine. It helps me get the word out about Zara's case anyway,
Very,
even while
very
we're
good.
talking money in GameStop. All right, well, I'm going to direct people to your site and show because this is obviously the tip of the iceberg, a toe in the ocean. How do people find you, Phil Ferguson?
Yep, it's any good podcast player, The Phil Ferguson Show. I am on Facebook. Polaris fan. No, The Phil Ferguson Show also has Facebook. On Twitter at Skeptic Money. I might even check if you send me a tweet. The best way is an email, phil@polarisfinancialplanning.com. Any hate mail goes to seth.andrew.
I'm just thinking, I've had these little fantasies, of, if I'd have bought at $10 a share and I'd have sold at $460 a share.
There's always that coulda, woulda. Like one of my phrases I like to say is that, have you ever known someone who's always trying to strike it rich?
Yeah.
Did you notice they're always trying?
Yeah.
Generally, it doesn't. Sometimes it does for the right person at the right moment. Like if you bet on a horse that's 10-1 and you win 10 times your money, that was not a good investment. It was a bet.
It's like going to the casino, right?
Yeah.
If I go to the casino and I've lost $10,000 over the last 12 months and I strike it on the penny slots and make $3,000, I'm still 7 in the hole. Like long game, I totally understand what you're saying. I'm just saying it's hard not to fantasize. If only I had a time machine and I went into the future and I saw that this, what are they going after next? AMC or, hell, it could be Blockbuster, whoever they think is on the outs.
And it's funny because these guys are looking at publicly available information about the short ratios for publicly traded stocks and then trying to run up those stocks. What if a handful of hedge funds look at that same list and get there a day or two before you do? So when you start promoting AMC on Reddit, you're actually making a ton of money for hedge funds that got there before you.
You are funding the man you are trying to screw over.
Yeah, the best way is regulation. Hedge funds should not exist in their current form. I would agree with anyone who says that, because I say it. That needs to be fixed. Shorts, I think, should be allowed, but there should be more tighter controls on margin and on calls that are written. There's a lot of things that can be tweaked to tone this all down. And one of the things I also support that people who listen to me are stunned by is that there should be a small tax on trading stock. And it could be something even like 0.1% of a dollar. And so that would put an end to people that do rapid computerized trading in large volumes to make fractional profits on margins and spread. The other thing, of course, don't use Robinhood. Not because they stopped you from buying more shares. Mostly they stopped people from buying call options. But Robinhood actually gets paid by another firm to execute the trades on behalf of Robinhood. So you're allowing a big company to see the metadata of what's being bought and what's being sold. And Robinhood has already been slapped around a couple times by the feds for not executing best trades. And if you don't know what that means, you shouldn't be buying a fucking stock at all. If you don't know what a spread is, you don't know what a best trade is, don't use a company that came up with a pretty app that you think is sexy on your $700 smartphone. Go to a real brokerage firm, and if you want best executions, expect to pay for your trades. When shit is free, it's often the most expensive because someone else has figured out a way to make money off of you without you knowing or understanding how it's happening.
More information about this kind of stuff with Skeptic on Money, Phil Ferguson, who reminds us that we should all take penicillin for our gamma squeeze. Phil, it's always a pleasure. I'm still overwhelmed, but I think you've helped to clear some of this up. And at the end of the day, I think the lesson remains. Don't buy based on emotion. Yes. Don't get worked up and start clicking buttons and, filling up your bank account with credit card loans to throw into the market because you're going to walk away a millionaire. It may happen occasionally, but it doesn't mean it happens a lot, and it likely won't happen to you. Do you think that's fair?
I think that's excellent advice. The way I do things is a really slow, save a lot of money, make a reasonable amount of return, and take some time. anyone that saves 10 or 20% of their income over 20, 30, 40 years and just does basic investing can and will become rich. It just takes time. And as Americans, we often just don't want to fucking wait. But that's how it works.
All right. Phil Ferguson, always a pleasure. We'll talk again soon.
Ciao.